Supply of goods. This article defines the different scenarios and legal situations in which a transaction is considered a supply of goods for the purposes of VAT under the UAE VAT law. Understanding these situations is critical for determining when VAT applies and who is responsible for accounting for the tax. The expanded points are explained below. 1. Transfer of ownership or right to use goods, immediate or direct supply. A transaction will be classified as a supply of goods if it involves the transfer of ownership of physical goods from one person to another. B. The term goods includes tangible property such as products, machinery, equipment, vehicles, inventory, and all other physical items. Movable and immovable items that are not classified as services. C. In addition to full transfer of ownership, a transaction may also qualify as a supply of goods if it transfers the right to use goods even if ownership is not fully transferred. D. Such transfers may arise through outright sale of goods, leasing agreements where the lessee gains significant control over the goods, transfers within the same corporate group under commercial arrangements. The executive regulation of this decree law provides further clarification on specific types of transfers that qualify as supply of goods, conditions and criteria that must be met for different industries or types of assets, any exceptions where a transfer would not be treated as a supply of goods. 2. Contracts for future delivery of goods, deferred or conditional supply. A transaction shall also be classified as a supply of goods when parties enter into a contractual agreement that requires the transfer of goods at a later date. B. In such cases, the supply is legally recognized at the point the contract is concluded, even if the physical delivery happens later. C. These contracts may include forward sale agreements, pre-sale contracts for goods under development or production, agreements for phased delivery of goods over a longer period. D. The executive regulation sets out specific rules on how such contracts should be treated, guidance on determining the date of supply for tax purposes, conditions where amendments, cancellations, or changes to delivery terms might impact the VAT treatment. 3. Legal reference to the executive regulation. A. Both types of supply, immediate transfer and future transfer, are subject to detailed conditions in the executive regulation, which provides definitions and interpretation of what qualifies as goods, specific cases relevant to different sectors, retail, construction, manufacturing, etc. Clarification on mixed supplies where goods and services are combined. B. Businesses should always refer to the executive regulation to ensure correct application of this article, particularly in complex transactions such as long-term contracts or asset financing. 4. Importance of classification as supply of goods. A. Correct classification is essential because it determines the tax rate applicable, standard, zero-rated, exempt. It defines who is responsible for collecting and reporting VAT. It affects the timing of VAT reporting, especially in forward contracts. B. Misclassification could result in incorrect tax returns, potential penalties from the Federal Tax Authority, FTA, disputes with customers or suppliers over tax treatment. For more details, contact us.